Good day traders, good day traders, good day traders. This is the actual trader. Now we're going to try and explore this entry strategy just by looking at the extreme levels. Extreme levels are simply the previous daily highs, the previous daily lows of a pair or of a security. So this is a concept that is respected by all securities, even indices are also respect this concept. So now, number one, we're going to look at the previous daily lows, how they play out, and also play out by using the Wyckoff system. We're going to enter our trades using the Wyckoff system, and now using the Wyckoff system, I think I need to put a link under the descriptions for you guys to explore what a Wyckoff system is, or a Wyckoff schematic play is. But in us entering using the Wyckoff system, we're going to use what we call head and shoulders, or Quasimodo, or a turtle soup, to place the entry under the lower time frames. And number three, now how to target your price or how to target your moves. This will depend on the structure, this will depend on where you are, or this will also depend on your understanding. But I normally use financial source. I also consult financial source if there are any fundamentals that kick in as soon as you enter the trade. So there's no need for you to exit the trade. But if nothing happens fundamentally, then just stick to your technical plan. So under this one, we're just going to explore it. We'll see how many returns we actually get using this system, because it's quite a risky system, because we're taking the reversal, we're taking the previous daily high, we're taking the previous daily low, and we need to be paid a huge sum of money because we're taking a huge risk. And you cannot risk much because we're not taking a momentum trade, we're simply taking a reversal trade. So it's quite easy for us to get stopped out if you're going to trade such a system. So let's see how it works out. Now, like I said, we need to use a Wyckoff schematic play. So here's one. You have a huge impulse or a bias climax, automatic rally, a test, a secondary test, a sign of weakness, a secondary test, another sign of weakness, a point C, and then you have your upthrust. This is a perfect Wyckoff play, and this is actually the daily high. So if this is the daily high, we mark off the daily high, and this is the daily high. Let's see what is the high here. 192. Now, like I said, we're going to use what we call a Quasimodo, or we're going to use what we call a turtle soup in order to enter the trade, because what happens now is that at the tops or at the bottoms or at the daily highs and daily lows, what happens is that the price normally zigzags. Stops are being taken on both directions, so you need to be patient. Just wait for something, wait for confirmation, and also consider the time of entry. Which sessions are you trading between sessions, or are you trading in one of the slow sessions? If you're trading in the London session and this takes place, then I think you need to wait for stops to be taken out, wait for stops to be taken on directions, on both directions. So this is how I would intend using this. This is what we call a Quasimodo. So this is a Quasimodo for a bearish setup. This is a Quasimodo for a bullish setup. We enter on the blue. We enter on the blue for the bearish setup. We enter on the blue for the bullish setup. Place a stop right at the top with 3. So what happens is that the price dries up, and then as it dries up, it makes a higher high, makes a higher low. The higher high is taken out to make a new higher high, and then what happens is that the higher low is also nicked out. So now this lets you know that something is about to take place. So as soon as this is taken out, what you do is place a sell entry here. Place a sell limit. Best is place a sell limit here on this level. This is the level where you need to place your sell entry. Place a sell limit and then wait for the price. Also place a stop here. This is for the bullish setup, and then for a bearish setup, and then for the bullish one is that you do the same again. Price needs to give you a seller's climax, or a seller's climax, or it gives you a lower low, a lower high. The lower low is taken out, the lower high is taken out again. This forms what we call a diamond setup. They call it diamond, they call it they call it a Quasimodo, an advanced head and shoulders. What is important is that stops needs to be correct on both sides of the market. You place your buy limit here, and then price drives on up. So what is happening is this is just a simple entry strategy. There is no context, as I'm saying. There is no, I'm not offering any context, because you need context in order to be confident about a trade. Context in terms of the higher time frames, context in terms of your fundamentals behind a trade, context in terms of the volume. Sometimes there's a huge amount of volume picks up as soon as you take the previous daily highs and lows. So we're not considering that, because this is just an MT4 platform, and this is just your CHF, which does not offer volume, or good volume rather. So guys, this is just an entry strategy. We're just going to study how to enter it and how to take advantage if any moves do actually take place. So like I said, we're going to use what we call Quasimodo. This is how you're going to enter it. This is how you're going to enter your trades, being bullish, bearish. If you don't understand what a Quasimodo is or how to play around it, I think you need to just Google it or YouTube it. And my advice is, do not place too much value on how to enter a trade. What is important is understanding the why behind your entries. As to how you enter it, don't place too much value. Let's not worry about entries. So yeah, let's move on. Like I said, we need to have a higher high. This is the top. This is not a higher high. This is the higher high. Price comes back from the higher high, a higher low. The higher high is taken from this higher high, and then here the higher low again is nicked out. As soon as it is nicked out, what you do is you wait. You place a sell limit. Price closes down here. You place your sell limit. You place your stop right here. So this becomes your entry now, and then this is how it plays out. Price does offer something out of this. What do you get? Let's see. Do you get paid for playing this? Yes. A simple 3R is made from this. So 3R. See, nice. So this is for this is when you're taking the bearish setup. I suppose you want to play a bullish one. You can even drive down to the lower time frame, but this is how I normally play it. This is how I normally trade it, because I use a lot of Fibonacci to confirm some of the plays, but it's best you play it using the 15 minutes, since you don't know anything about this. So I normally do this. I wait for the extreme at least to be nicked out, price to close above it. As soon as it does that, let's see. This is my extreme level, which is simply 123. There's nothing special about it. This is just a concept I came up with. Price doesn't close here. It gets tagged, but doesn't get. As soon as it gets closed, then this is what you're going to have. the Quasimodo higher high, higher low, higher high taken, higher low also been taken. I place my sell limit right on this one. And then I can place my R read now. So remember, on the 15-minute this offered 3R here, on the 5-minute it offers 4 or 5. Let's see. On the 15 this was a 3. On the 5-minute you actually get 1 extra R, which is simply 4. So yeah, so it's up to you whether you want to dive down or dive down to the lower time frames in order to get a seed entry, or whether to extend your R's. But I think you need to stick to the 15-minute. And yeah, let's move on to the next setup. Suppose now again tomorrow, after taking a target, this is the daily low, price comes on up again. What happens is that the previous daily low is also nicked, but as you can tell, you don't have any entry here. On the 15-minute it offers this, the lower low, the lower high, the lower low is taken, and then what happens is that price drives on up, but this is what is happening. It doesn't even offer a one-to-one. You won't even have time. You don't even have the time to make a break-even trade, which is bad. But let's see what happens if you take it down to the lower time frames. Oh, there it is. So yeah, you make a lower low just under the previous daily low. This is the lower high. The lower low is taken out, and then price takes the lower high, and then it comes back again. Let's see if this is tradable. Yes, it comes back on this candle. It comes back, offers 1.4 pips, which is enough to cover the spread, I suppose, and then it goes on back up. Let's see. Yes, so you do get 3 R's under the lower time frame. You do get something 3 R or 2. It's up to you how much you want to risk. So yeah, the strategy is tradable. It's quite tradable. It's quite easy to maneuver, but sometimes you need to drive down to the lower time frames. But I would say stick to the 15. Make your money. If you're not getting anything on the 15, move on to the next pair, because this is just a single pair. So some pairs you need to drive down to the lower time frames, even 1 minute. Some 1 minute they offer maybe 10 to 5 hours. So, but for you, in your case, what you need to do is just follow this. Look at the previous daily low, daily high, the Wyckoff. Use the Wyckoff. Like I said, if you don't understand what Wyckoff is, YouTube it, Google it. I think there are videos that are best suited to make you understand what a Wyckoff is. And then the target price, this depends on your target again, daily targets, whether you want to use structure, whether you want to use volume, whether you want to use fundamentals, because this is just an entry, how to place an entry without considering the context. If you factor in the context, then the TP is also going to change. So I'm not placing too much value on this, but I do promise you that it does offer great R's. Great R's if you factor in a lot of things. Like I said, this is an actual trading style. This is just us trying to model the behavior of a price. So also now, the entire idea of this video is that if you trade the style or you trade the strategy and then it's effective for your being, it's effective for your system, I think you need to get to a point where you are able to purchase this or get yourself this service, Financial Source, which is simply $97 a month. This thing is very good, guys. This thing is very good. This is something that is relevant for any trader, even if you don't use fundamentals. But I think we need to stop sticking to forex calendars and investing.com. Those guys are not good for us. They're not good for trading. So because there are too many ads on their sites, they're not offering any value. So if you're good at trading or you make a significant amount of money, get yourself this service. Like I said, this is the actual trader. Thank you for coming to my channel. Thank you for liking. Thank you for commenting. Thank you for subscribing. Go to the links, guys. Study more of what Quasimodo is, what Wyckoff is, and email me if you want to be in contact. And I thank you.